Welcome to the Fintech One-on-One podcast, episode number 310. This is your host, Peter Renton, chairman and co-founder of Lend It Fintech. Before we start this episode, I want to tell you about a brand new event from Lend It Fintech. Fintech Nexus, the Deal Makers Summit, will be the first major in-person fintech event of the past 18 months. A hand-curated audience of venture capitalists, bankers, fintechs, and debt investors will be meeting face-to-face at an event 100% focused on doing deals. It will be happening in Miami on September 1st and 2nd. You can apply to join and find out more at lendit.com. Today on the show, I'm delighted to welcome Thejo Kote. He is the founder and CEO of Airbase. Now, Airbase is an interesting company. They're a spend management platform for small and medium-sized companies, and they really are solving a problem that exists to this day of these disparate systems that are controlling expenses for businesses today, something he experienced firsthand at his previous company, which was the impetus for starting this company, which we get into in some depth. We talk about the real problem today, how Airbase is addressing it, what differentiates them from some of the other players in the space, and the fact that it is a really hot space right now there's a lot of activity with some of the other players, but Thejo also makes it clear what actually differentiates them. We talk about the latest funding round they did, which was very recent, and how that happened, that came together so quickly, and we talk about what the future holds for Airbase. It was a fascinating conversation. Hope you enjoy the show. Welcome to the podcast, Thejo.
Thank you for having me, Peter.
My pleasure. So let's get started by giving the listeners a little bit of background. I know that this isn't your first rodeo, so tell us a little bit about what you've done in your career before Airbase.
I'm originally from India, grew up there, and I moved to the US in 2009, right? And I had worked in the US for about 4.5 years before that. Most of that time at a startup, because I knew that's what I wanted to do with my life working. I started my career at a large company. Fairly obvious to me that wasn't something I enjoyed. So, worked at a startup to learn what it's all about. And then eventually I wanted to make my way to Silicon Valley. So now the startup ecosystem is really dynamic in India, but it wasn't the case in, say, 2008, 2009. And I felt I had to kind of come to Silicon Valley to live that dream of starting technology companies. And so I did. And the best way to do that was to come to grad school out here. And so did that in 2009. But as luck would have it, soon after I graduated, there was an opportunity for me to start my previous company. It happened sooner than I expected it would. But it was based on some research that my co-founder in my previous company and I were working on in grad school. And I saw an opportunity to commercialize it and things like that. And that ended up being Automatic, my previous company, which was in a very different domain than Airbase. We were building a connected car platform, right? And so we were probably 2 or 3 years too early in going after the technology-enabled automotive use cases that are more accepted, I guess, in the financing community now. And every step of that journey with Automatic was a little harder than it probably should have been. And ultimately, it was all good. It worked out well. We built a good business. We ultimately sold it to SiriusXM in 2017. And of course, it was part of that journey that taught me all about the problem I'm trying to solve now with Airbase around how businesses spend money and manage all of the non-payroll spending that happens in the business. And it was a pain point that I lived pretty much every day, and I learned about it. And but anyway, that's kind of the high-level overview. Happy to jump into some of the details of what I learned and why Airbase, if you're interested.
Yeah, for sure. Let's do that, because I'm curious about the expense management space. It's back in 2017. It wasn't as sexy, shall we say, as it is now. It feels like there's a lot of activity in the space. But what was it that you felt like you really, because there were players back then, but what was it you felt was missing? What attracted you to it?
The foundational problem for me was when you think about how a business spends money, it happens in too many places, right? And we can have a much longer conversation about why the market even evolved that way. Even today, for the most part, the status quo is, of course, segments matter in these businesses. You can't kind of paint a broad brush, but mostly for small businesses and mid-market businesses, if you think about how they manage all the non-payroll dollars that they spend, there are multiple systems, right? So you have a corporate card system where a bunch of money is spent, and then not everybody accepts card payments, so you are receiving invoices. There is an AP system or a bill payment system like a bill.com that you're using to ingest invoices and create those bills, get approvals, make ACH, check payments, those sorts of things. That's a bill payment system. And then employees are spending their own money and they're coming back and saying, hey, pay me back, reimburse me. And those are separate systems like Expensify, expense reimbursement kind of products, right? And so those are kind of the three primary systems that every company has to put in place. And that happens pretty early in the life cycle of the company. When you're 15, 20, 25 employees, you have these systems and we were in the same boat. And but as you're growing, as you're scaling, you want a little bit more process, right? And you want people to ask before they spend money. And so how does that happen? Oh, that happens in a Slack conversation. That happens in an email conversation, or some enterprising finance person says, oh, this is too painful. I don't have an audit trail of how decisions were made. So I'll put a Google form together, or I'll introduce a Jira, based ticketing process for people to ask before they spend money. So very ad hoc kind of systems and processes. But on the tail end of it, it is incredibly painful for finance and accounting people as part of a monthly close process to get all this data from all these different systems and reconcile all of these different systems through which money is flowing. And it's a massive amount of manual, low value work that isn't a good use of their time, right? And that was frustrating. And the other, from a business kind of perspective, the frustrating part to me also was that none of the budget owners, the people who are accountable for ultimately running the business and spending the business money on behalf of the business, they don't have visibility into what am I spending, right? And this is the way modern businesses operate, in that you have a budget and you're trying to spend it throughout the month. You don't really have visibility into how much am I actually spent, because all of it is going out the door through different places, right? And when you are trying to make a decision about, can I spend this money? Can I commit to this? You're winging it, basically, right? And so for the most part, you have to wait till the end of the month. You have to wait for the accounting team to pull data from all these different systems, bring it all together into your accounting software or general ledger. And then your financial statements come out, say, a week to 10 days after the end of the month. And then companies go through a budget versus actuals analysis process. And then people get a report card 2 weeks into the next month saying, hey, you went over budget last month. And what do you do now, right? It's too late. And so that's how modern businesses operate. You're like 6-7 weeks behind at all times in terms of your visibility into how am I doing when it comes to spend, like the all important thing. And that becomes a bigger and bigger problem as you scale as a business. There's a lot of slack and there's a lot of lack of discipline in terms of how you spend money. And it's hard to hold people accountable when there are no good tools, there are no good workflows and processes. And that's basically was my frustration all along. And obviously I was not solving that problem. I was building a different company. So it went into my ideas notebook to look into, when I had the time, and I finally did after we sold Automatic. And that's the problem we solve with Airbase today, which is to really bring all of those different elements of how non-payroll spend happens, the entire set of workflows and life cycle from the moment an employee thinks I want to spend money. How do the request approval workflows happen? How does all of that internal collaboration and decision-making process happen? How do you bring that into the platform? How do you capture that as an audit trail so that you can attach it to every dollar that leaves the door, even if it happens like 2 years in the future? So that's on the front end. And then when you decide to spend the money, how do you help with the payments? Payments shouldn't happen in different systems just because they use different payment rails, right? How do you bring all of the payment rails? It could be your card rails, Visa, MasterCard. It could be your ACH, check, wires, international wires. How do you kind of bring all of them into one system? And finally, as the money is leaving the door, how do you then take care of accounting operations, all of it in one system, even automate away a big chunk of it in terms of how it's all recorded in the GL? Bring all of that into one platform. That's the 10x improvement that you can deliver to the market compared to kind of these independent, siloed, fragmented solutions that the market has had to deal with so far, right? And that's kind of the way we approach the solution to the problem. And at this point, that was the hypothesis in 2017 when I started working on Airbase, that is the right way to solve the problem. That is where the market is going. But as it turns out, thankfully, that's been validated at this point, and I'm confident that will be the default expectation of the market. I don't see why in a few years, as this new category of spend management, at least in the small and mid-market segment, it's a new category. As it becomes more prevalent and people are informed about it, I don't think I could get up in the morning and do what I do if people would look at this kind of an offering and still say, no, I prefer having 5 different systems for how I manage spend, right? That almost never happens. And so that's how I think about it.
Okay. So then let's just dig into it a little bit. I'm on your website here and you talk about 3 products, which are bill payments, corporate cards, and reimbursements. And are you you said one platform. Is this sort of a menu, or when someone comes along and wants to use your services, do you sell them one by one? Do you sell them all 3? And how are they integrated?
We don't force people to sign up for everything from the get-go, right? And so we're definitely happy to work with people where they are. But more than half the new customers that we add, they absolutely buy into the benefits of having everything in a single platform. That is a primary motivator for them to shift away from all of the point solutions that they have and to move to Airbase. It's that they see the value, they see the benefit of having real-time reporting of every dollar that leaves the door, for the finance accounting team, for the rest of the team, the ease of reconciliation and one system to reconcile against for all non-payroll dollars against the GL, which cuts down the monthly close time by half. Like all of those things are obvious to them and they say, great, I'm just going to go for all of them at the same time. But sometimes people don't, right? Because they are in the market for a specific solution, and that's how they find us. That's how they run across us. So they're like, I just want a better bill payments solution. I want a better expense reimbursement solution. We're more than happy to give that to them, right? And so we're not going to force them to. It's not an all or nothing with us, because it's an opportunity for us to grow with that customer later, right? So even if they start by only using, say, the bill payments aspect of our product, we give them free access to the other areas, at a limited level, so that they can experience the power of having everything in a single platform. And hey, that's an opportunity for us to continue to grow with that customer. That's how we think about it, and that's how we approach our go-to-market kind of strategy. Right?
So who is the target exactly? I mean, are you talking about businesses between like 10 employees and 500? I mean, are you going after the large corporates as well? I mean, what's the sweet spot?
Well, that's a good question, because that segmentation really matters, and there is quite a bit of noise in the space as of this recording. But we really target mid-market companies, right? Because in my view, that's the most underserved part of the market. And my definition of mid-market is, say, 100 to 1,000 employees, or maybe even 50 to 1,000 employees. That's who I think is the most underserved. And we focus on that market because that's the market that really suffers from the pain of having many different silos and fragmented solutions. Because look, if you're a 20 employee company, 10 employee company, yes, you need a corporate card. Yes, you need to pay your bills and do some reimbursements. But the amount of money being spent, the number of transactions that happen, they're not that large, right? So the pain of dealing with fragmented solutions isn't as acute. But as you start growing, 100 employees, 200 employees, 300 employees, that pain starts to become really acute in having so many different systems, and the sheer coordination problems of having people in the business jumping into different systems to do different things, training them to jump into different systems to do different things. All of these things start becoming much more complicated, right? And so that's the underserved market that we focus on. And so we tend to think of ourselves as a mid-market focused company. There are other companies that are trying to do similar things in terms of consolidating these different elements for the lower end of the market, the really small customers. And look, spend management has existed in the enterprise segment for a while, right? So there's a company called Kote, which does spend management, SAP Ariba. There are a few big players in the enterprise segment, but the mid-market has always been very underserved, right? And that's who we are targeting.
Okay, so then I'd love to kind of get your sense of your approach to product development. Are you doing this? Is this a close collaboration with your customers? Do you sort of see the need and go and build it yourself? I mean, what is your approach to product development?
Before I started working on Airbase, now I had a hypothesis about what the problem was. I'd kind of lived the pain point, but ultimately, I'm not an accountant. I don't do that job every single day, right? So I took my hypothesis to a few dozen controllers, accounting managers, VPs of finance, CFOs, folks like that. And I had like dozens of conversations, which obviously made me a lot smarter. And I learned a lot more about the problem. But long story short, it kind of validated my hypothesis of what the pain is and the fact that, okay, this is a big pain. There's a shift happening in this market of how you could start consolidating all these different elements. And that's a big opportunity in the big market. And that's what gave me conviction that, okay, I can go spend another 10, 12 years of my life building another company, right? And so that's what I started with. But at this point, we pretty much build exactly what our customers are asking for. Our customer base is large enough that they drive the roadmap for the most part. We are actively listening to customers. Part of the unique thing about our product development, which you have to do as you go into larger companies, mid-market, enterprise, and larger companies, is you have to deeply, deeply understand the work that your target customer does, right? So you have to understand what is it that you do every day, right? Where are the opportunities to improve the workflows? We think of ourselves primarily as a software workflow product, right? Yes, we're also a fintech company. We embed payments into those software workflows, and part of what makes for a 10x solution is by bringing together software workflows and payments, and we do that. But first and foremost, we're a workflow company. We deeply understand how does information flow inside the business? What are the manual tasks that are happening in the business? How does collaboration and communication happen inside the business, and how can you reduce the inefficiencies there? Because there are lots of them. Spending money is inherently a collaborative exercise in a business, right? And having many different systems to do that is painful in lots of ways. And so we try to dig deep and understand every one of those elements. And we keep talking. At this point, the majority, 95% of what we build in any quarterly planning process ends up being a prioritized list of what customers are asking for. So we're in the happy position of being able to do that, right?
Let's talk about the accounting systems, because obviously you're not accounting software. This all has to integrate into some of the major systems out there. Can you tell us I presume you work with all the big ones, but how are you doing that integration?
It's all API-driven integrations. It's a lot of work, right? And so right now we support 5 of the major GLs, which on the lower end of the market, so say the 50 to 200, 250 employee companies that we target, the most common general ledger systems we see are QuickBooks Online, QuickBooks Desktop, and Xero, right? And we have integrations for all of them. And then mid-market, upper mid-market, the 2 biggest ones are NetSuite and Intact. We have strong integrations with them, and then we're kind of certified partners and all that good stuff. But building those native integrations, right, where literally we have a large team of engineers who are building against those APIs, that's a core part of the value proposition that we offer, is the seamless integration into the general ledger and even automation in a lot of cases. How do we make sure that as transactions are happening on the system, as money is being spent on the system, what percentage of those transactions can we correctly categorize and record in the general ledger without an accountant having to be involved at all, right? And do it perfectly, do it correctly. That's kind of an important number that we care about. And so to do that, to deliver on that promise of automation of accounting and seamless workflows and recording information in the GL, you've got to go invest in building those deep integrations. And the larger the company gets, from NetSuite and Intact especially, there are lots of these custom functionality that those general ledger systems have, that's where the value comes in, right? So can you go do those very custom integrations into a system like NetSuite? Just to give you an example that maybe the non-accountants will not care about, is if a payment is a prepayment for something you're paying over a year, right? So there's a specific way you have to go and amortize it over 12 months. The common thing that most systems do is that you spend the money in a system, then you make the entry normally, then the accountant into the general ledger, and the accountant has to remember to go into the general ledger and set it up correctly for amortization in NetSuite, right? And if they forget, they booked it incorrectly, right? But with Airbase, we have a deep integration with NetSuite where you can set it up inside of NetSuite in terms of how you want to amortize it. But when we record it in NetSuite, we set up all the things correctly in NetSuite so the amortization happens. So there are a bunch of those kinds of examples where that's not easy. You have to go deep system by system and to build that deep integration from the GL of the company that we work with and Airbase. And that's a big part of what we do, right?
Right. Okay. So as I mentioned, expense management is actually a pretty hot space right now. You just had the Divvy being acquired by Bill.com for a huge amount of money. You've got Brex and Ramp that are raising big rounds at large valuations. What is it about Airbase that is different to some of those aforementioned companies?
Yeah, so as you start kind of digging into segmentation and some of those things, that's when it starts to become a little more apparent. And Bill.com has historically been a small business focused company. I think they have north of 100,000 customers, and I think they're almost an accidental mid-market company in that the mid-market is so underserved that a lot of companies, they start using Bill.com and then they continue using them as mid-market customers because, well, there's no other good option in the market. Primary focus has been small business. I think Divvy was a good fit from that perspective also because they go after these main street businesses, really small businesses. And Brex and Ramp are similar, right? For the most part, all of those companies that you mentioned, their customer base, if you just look at their customer base, not that I have deep inside insight, but from everything they talk about in public and numbers, and it's fairly obvious that the vast majority are very small customers, right? It's like less than 20 employees, less than 50 employees. And that's fine. There is a problem there, right? That there's 6 million very small businesses out there. You can absolutely serve them, build a good business. And we are focused on a slightly different segment, right? So we are focused on the mid-market. And the analogy I think about is, look at this. And we were just talking about general ledger systems. Why is it you have QuickBooks and Xero at the low end, you have NetSuite and Intact in the mid-market, and you have SAP and Oracle in the enterprise? Like, and if you pick the top two players in every segment, why is the market segmented like that? Because this is a problem domain, and that's one of the core hypotheses for us in the spend management category that is getting created in the low end of the market, in the mid-market, that it is a complex enough problem that one player can't be all things to all people. You got to pick, right? You got to pick the category you're going to serve, and then you have to go deep, and then you have to try to win that category. And we're focused on the mid-market. We've always been focused on the mid-market. I've always been talking about this problem as a spend management problem and a problem of consolidation of all non-payroll dollars. And a bunch of these other players, they started off as corporate cards. And then, as of a few months ago, they're also starting to talk about spend management because I would like to think we have done our part in evangelizing the bigger opportunity and the bigger prize, and that it's not just about corporate card. And so some of that is happening, but still, even if some of these other players choose to become spend management companies, serving the needs of very small businesses, it's a different ballgame than serving the needs of mid-market companies with the breadth and depth and surface area of product that you need. And we'll see, but definitely very interesting space to be in, and big shifts happening in terms of customer expectation and in the market. And huge market. I'm not surprised there are players raising money and going after it, right?
Right. And you also raised money yourself. I read in TechCrunch earlier, I think it might have been last month now, but you raised a round very quickly, led by Menlo Ventures. Tell us about that process and how it came together so quickly.
We've always been very fortunate to have a lot of inbound interest from investors. And every round I raised prior to this one was all preempted. I was not really in the market to raise the money, but it was kind of preempted by good investors. So we took it and kept going. But this was the round where, yes, there was already a bunch of people had been reaching out. And given how I noticed the market was heating up, the original plan was just, we had most of the 30 odd million that we had raised in the bank, and there was no need for us to go raise money. The original plan was, okay, maybe sometime next year, we'll go think about raising money. We'll hit the milestones that we had defined for ourselves in terms of the plan we had for this year. That was the plan. But given how some of the kind of funding rounds and those kinds of things have happened in the space, it became clear to me that, look, this is not a market right now and a space right now that is rewarding capital efficiency. And so, we have to kind of make a statement. A big part of why we just chose to do the round was to show that we could, right? To show the internal momentum that we had and to kind of project that to the outside world. And, that was a big part of the goal and the motivation. And because there was quite a bit of demand, we were in the fortunate position of being basically able to raise our hand and say, hey, we will raise around, and we had conversations with a few very good firms, and we ultimately decided to go with Matt Murphy and Menlo Ventures, and it got done very quickly because, again, big market, big opportunity. I think we have a differentiated kind of opinion about how this space continues to evolve, and that's how it came together.
This is a SaaS business model, right? People are just paying you a monthly fee to use your offerings. Is that how you do it?
Both, actually. So this is one other way in which we differ from other players in the market, and primarily because we go after larger companies, right? Where mid-market customers, they want a partner for the long term. It's not as much of a transactional relationship for them. They want the support. They want a neck to wring when something goes wrong, and this is a mission critical system. How do I spend money as a business? And so we also offer the breadth and depth of functionality that a company that is 300, 400, 500 employees or more needs. And so we are absolutely able to charge for the software, and customers see the ROI. And so they pay the subscription fee that we charge for software. But of course, the good news is, as a side effect of customers using the platform, there are financial services revenue opportunities for us also. So it's not like we don't make money on that side, and we do. And so it's a mix of both.
Okay. So can you give us a sense of like the scale you guys are at, like number of employees? I don't know if you can share a number of customers, but whatever you can share about the scale and the growth that you've been experiencing.
The team is growing quickly. We're a globally distributed team. We've always been one, even before the pandemic. We have employees in 10 countries right now, about 125, I think, at last count. We are adding, a few employees every week at this point. We expect to be north of 200 employees by the end of the year. We're hiring more than half the team right now is product development. Again, large surface area of product, and we're absolutely going to double, triple down on that to keep our multi-quarter lead that we already have in terms of serving customers in that segment, hiring on the go-to-market side very aggressively. So all of that is happening. And so because the numbers are reflecting that, we are doubling ARR every 6 months. That's been happening for a while now. And at some point that might slow down. And so far, it's going really well. And transaction volume, I think we're approaching a couple of $1 billion of annualized transaction volume of payments flowing through the platform. That continues to grow very quickly. It grew about 7 times year over year from last year to this year. And we're projecting a similar kind of growth from this year to next year, if you look at it, year over year on an annualized basis. So, all the numbers are moving in the right direction, right? And so we feel very good about how things are, the direction in which things are heading. And now it's just a matter of putting our heads down and executing and focusing on the core customer and not getting very distracted by the noise. And that's what I'm focused on.
So last question, I'm curious about where you're taking this. As you've been talking, I've been thinking about a number of different ways you could take this. There's obviously the credit side of the business. I mean, I'm curious about, are you going to remain in this sort of software play with, a bit of payments activity happening, or what's your vision?
We don't think of ourselves as a lender, right? And we are actually in the process of partnering with banks, and we don't want to compete with banks too. I don't want to be even in the corporate card issuing game. We do that. Why? Because, of course, the big thesis that we have is you have to consolidate all non-payroll spend. You shouldn't have many different systems, consolidate all spend in one system. But a sub-thesis I've also always had is that the corporate card as a product, it's a software workflow product. It is not the product that we think of it as today, which is a piece of plastic. You put in an envelope, you send it to employees, they spend money. End of the month, you give the finance team a PDF statement. That's not the corporate card of the future. It is going to be a software workflow product that is deeply embedded in the decisions of how the business spends money, the controls that are necessary, the accounting that has to happen as money is spent in those cards. It's going to be a software workflow product. And we started issuing our own cards because, how else do you showcase that thesis, right? That here's what you can do when a corporate card becomes a software product. But long term, I really have no interest in, participating in the corporate card wars. I happen to think it's a race to the bottom, and you can't just focus on cashback and rewards and the size of the line of credit that you provide as the only differentiators. The differentiators have to be elsewhere. in my view, it is deeply understanding the work that finance and accounting teams do. And so, yeah, we're always going to double down on that, right? And so we're in the process of partnering with other banking partners and major card issuers. Now that we've shown that that thesis is true, that the market actually believes in that, and they're also the customers are demanding that, and that has happened. There's a lot of good traction in terms of working with other issuers, and of course that lends itself to our business model, right? So if you have a business model where the only way you make money is interchange on the cards, guess what? Like, you have to participate in the corporate card wars and play that game. And we want to focus on the software primarily. Not that we don't like the money that comes from financial services, but we're a lot more focused on being a software first, workflow driven company. And that's what we'll continue to do, right?
Okay. Well, we'll have to leave it there. Thejo, it was really great to talk to you today. Fascinating story. And as you say, it's a massive problem that, that really needs to be addressed. And so good luck with all of your future endeavors there.
Peter, thank you. And thank you for having me on the show.
Okay. See ya. As I said, the expense management space is really hot right now. And, I think part of the reason, which we didn't actually talk about here, but I was thinking about as I was reflecting on our conversation, is that these are very sticky businesses. I mean, once you've got into a company like Airbase, where you're managing basically all of the expenses, non-payroll expenses of your business, I mean, it's going to be a lot of pain to change to a new system. So I could see how we didn't talk about churn, but I'm imagining it's very low, and that's kind of why I think they're attracting a lot of VC interest. And I'll link to the TechCrunch article in the show notes that talked about that last funding round. And it was really quite staggering to me. It was 10 days from initial conversation to term sheets. I know we live in a COVID world without where everything's done on Zoom, but even that's extremely fast. And it just points to, I think, not just the management of the business that Thejo has created, but also how the space itself, the expense management space, is something that investors want to be part of. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Before we go, I want to remind you about the brand new event from Lended Fintech. Fintech Nexus, the Dealmakers Summit, will be the first major in-person fintech event of the past 18 months. A hand-curated audience of venture capitalists, bankers, fintechs, and debt investors will be meeting face-to-face at an event 100% focused on doing deals. It will be happening in Miami on September 1st and 2nd. You can apply to join and find out more at lendit.com.